Good morning, everybody, and welcome to the Hardcore Mortgage Real Estate Business Show podcast that we do every Wednesday. I'm Harvey Freed, and John Kolb joins us, of course, from Capital Mortgage. Good morning, John.
Good morning, Harvey.
So, John, always we start to think as the Fed's out there having their meeting today of what's going to happen out there in the mortgage world. And John, you and I constantly are reading the articles and keeping up with what's going on in today's marketplace. So let's start off. We'll do the rate thing, and then we'll talk about the inventory, of course. And then we'll announce our great radio show guest we have coming on Saturday. John, the Fed's going to meet again today. There's some whispers out there that the Federal Reserve may not make any changes to the Fed funds rate. We're going to find out, I think, by 2 o'clock today. But even when they do announce these, some of the increases throughout these 10 increases that they've already had this year, the rates actually a couple times got a little bit better.
Well, right. I mean, remember they put out their plan way back a year and a half ago of 50 point increases across the board. Sometimes they did 75, and this last time they only did 25. So when the market builds in what they're anticipating to do, and then they do a little bit less, yes, we get a little bit of reprieve, and our rates get a little bit better because the market gives it back. What we should see today, like you said, Harv, that they may skip today. I think that'll at least keep us the same, if not get the rates a little bit better. I mean, we're not going to see a half or 0.75% change in the interest rates, but you might just keep status quo, mid to high sixes with the interest rates right now. And, that's going to be okay. That's still good where people can still afford things. It's not throwing a huge loophole in the market and what everyone's trying to do. But the real question is what will they say in their after meeting and what their projections are for down the road. And, if they're talking about still doing increases down the road, it could cause our market to be a little bit more turmoil. Have a little bit more turmoil than normal. So we shall see. It all depends on what side of the mouth that the Fed wants to talk out of.
Yeah, no doubt. The Fed funds rates never have a direct correlation to mortgage rates, but they have some effect on mortgage interest rates. And there's no doubt rates are still more than a percentage point higher than they were a year ago today. And of course, coupled with the low inventory out there, it's continue to be a constraint on home buyers all across the United States. Definitely here in Michigan, we're seeing very lack of inventory, which has just been the talk of the town now for the last 2 years. Other things, though, you hinted to it also, and I like that you brought that up. Some of the experts out there were talking that, you're going to see lower rates, mortgage rates come the end of this summer. And it's not necessarily true. We've seen a lot of the experts, in air quotes, of course, sort of stumble on that. And we've also told buyers that, look, potentially, this is how your loan officer should be talking, potentially down the road, maybe next year as an election year, potentially that you could see lower interest rates and a chance to refinance your mortgage. But definitely, if you're talking to professionals, they're approving you on today's rates, making sure that home affordability is affordable for you and that you're not overbuying or getting yourself into trouble. So again, the interest rate, I talked to a car dealer, a car sales guy this morning at a dealership, Gowling, and we were talking about it. And he said, yeah, Harvey, I have to sell cars just like we do. We have to sell mortgages no matter what the rates are. And families need cars. They need housing. And it has to be within their guidelines. Again, if you're thinking about a growing family, well, then don't overpay for the house. If you're thinking about that your budget's a little bit on the tighter side, then understand that debt to income ratio and how important all those numbers are.
Yeah, absolutely. And, I like to say that we don't really sell mortgages, right, Harv? I think, we do more consultations and give people their options because, what's put forth in front of us are guidelines and, rates that are out of our control. So what can we do? We can actually just try to, make the numbers work. I had a real good compliment on Friday last week from a client who was selling his other home, purchasing a new home, and a local lender in Lansing who he had used in the previous years had told him that he couldn't qualify for anything because he was self-employed. Well, the realtor who was local to the Southeast Detroit area put me in touch with him and said, hey, John, what do you think? I ran the numbers. gave him some advice. When it comes down to self-employment, it all has to do with your tax returns. And we were able to get him into a home, and he closed last week. The number one thing is planning and preparation. And we caught him at a good time before he had filed his 2022 tax returns. We made sure that when we talked to his accountant that he wasn't writing off frivolous things that were going to really hurt him in his being able to purchase a home. So it's all about dealing with experts. We do consultations. We don't sell you a mortgage. If you want to use the Mickey Mouse or the McDonald's down the street, you're going to get what you pay for. I mean, we all have the same costs. We all have the same rates. And it's all about, making sure that you're dealing with somebody who knows how to get you to the finish line. And quite honestly, there's more and more people out there fumbling that ball at the finish line, Harv. And that's where we pick it up and we take over.
Yeah, you make a whole bunch of great points out there. I'll stick with the self-employed one. No doubt about that, is making sure that you're really documenting yourself properly. We love, again, Becky, we all talk about this, having these great conversations up front. And one of them is you're self-employed. You might have 2 or 3 car loans. And if you use your business account and you pay out of your checkbook, your business account, so you have direct withdrawals coming out for your car loans that are written off through your business. Well, this is the type of stuff that we can document that your business pays for these things, allowing you more affordability. So again, having the expert break down your income on a self-employed borrower, again, more than half of America, I think more people are self-employed than actually W-2 employees. So having your finances handled properly, having that great relationship with your CPA, and then having the professional lenders. As John, you mentioned, we see so many of them fumbling at the finish line or really up front. I had the same thing with a buyer, and she was only approved for an FHA transaction. Well, that wasn't the case at all. And just having that conventional approver in her hand also, which is, again, 3% down versus 3.5% down, which just the acronym FHA sometimes scares away an unqualified real estate agent. They don't understand that that might just be as easy loan as a conventional loan. But now she's a conventional buyer, and it might increase her chances as first-time home buyers are up against all the investors that want to buy up all the housing and all of the first-time home buyers that are out there. The low interest rates, of course, have brought an unprecedented amount of buyers out there. The generation added 7 million new homeowners in the last 5 years, and those numbers are not coming down. So you're up against all your friends and family members that are building their families up, getting married, and sick of renting or sick of living at mom and dad's basement. So, right, having those professionals, it's really, really important. John, I'm going to touch on another thing. I've had an opportunity to do some more open houses. And my idea was that I was meeting more buyers. John, I'm absolutely shocked that the buyers needed more and more of my help. I'm being humble here. But my 31 years of experience is precedent in helping families. And so many of the buyers didn't have the knowledge. Their agents were sort of scary to boot. But the lenders, I don't know what they're talking about anymore. And a lot of the local lenders are showing off that they're doing these open houses, they're bringing water and cookies, but they don't have the knowledge. So now they're trying to get more and more buyers out there on their team. I have no idea what they're talking about. They're not talking about debt to income ratio. They're not talking about ancillary cost involved, association, taxes that are going to change on families. The cost, if there's a budget problem in an association, do the new roads need to go in a subdivision? Will you be assessed additional money? They don't even talk about what's going on. They don't even know the school districts, what high school feeds into this neighborhood. So all the important things about financing that ties into you making great decisions, get the experienced people behind you. And I think you're going to have a lot better success of home ownership. Easy for me to say.
Yeah, I mean, that ties into the whole thing that we always preach, work with a good team, and working with a mortgage expert who knows what they're talking about and also can bounce back and forth with a good realtor who knows what they're talking about, because those things are going to be really, really important when it comes down to it. Because like you're saying, Harv, association, dues down the road that may come up for new roads. Those things are not part of our everyday numbers or the numbers that we're going to get you at for what you need for closing. But they are things that you need to be prepared for because we want you to be successful. So between us and the realtors that we provide, or that we work with, I shouldn't say provide, what we work with, you're going to get the best of all worlds and get yourself set up for success. Because we don't want you to just get into the home and then realize taxes are going to increase by $200-300 a month a year and a half down the road without any knowledge of so and why. And we just go through all those numbers and make sure that you're going to understand them. Speaking of which, we've got a great realtor coming on this Saturday from 9 to 10 a.m. on 97.1 FM, the ticket, and that is Noel Heidemann from Max Brock Realtors and out of Birmingham. And Noel is an associate broker. I've been working with Noel for over 24 years, I think. So that means he's old, just like myself. But yeah, we're going to have him on the show. He'll be able to get you a lot of knowledge. If you got any questions regarding listings or buying, the guy knows his ins and outs. So make sure to join us and check it out.
Yeah, dealing with the experts in your own backyard of the cities you're looking at. I mean, Noel's an expert in Oakland County, Birmingham, up and down the Woodward corridor. Having this experience so matters in today's mortgage and home buying process, right? You might be forced to overpay on a house. The minimum, you want to know more about that neighborhood, more about the changes in the local areas and what's going on, and whether it be the shopping or anything involved, the local shopping, the school districts, all the important stuff about home ownership. Yeah, John, so the Fed's going to meet today, and the CPI numbers didn't do really much to alter today's conversation. We'll see what happens there. But there's no doubt that it could give us a plot for higher and longer. In other words, not this talk that, oh yeah, the interest rates are going to be a lot lower at the end of the summer. That might not be the case. And we might not see a break on interest rates till next spring, next summer, maybe never. Who's to say it's ever going to come down? And if it's never, then it's more and more important to understand the breakdown of what a discount point means to you. What other mortgage options might be available to you? Do you want to buy down an interest rate? How long are you going to keep the mortgage in the house for? All that important stuff. John, let me just bring up another subject. More and more pocket listings because the inventory is so low. It's why you need to have these experienced agents that have been around a long time. Also, we're seeing more and more families selling to each other and how they can go ahead and set those transactions up to keep that built-in equity, 20% equity, without paying mortgage insurance.
Yeah, absolutely. I mean, you got to be able to find the house. It doesn't matter if you're using an agent, buying it from grandma, whoever the case may be. Whatever we can do to get you into a home the right way, the best way, we can do it. We work with for sale by owners all the time. We help the transaction on both sides, buyers and sellers. Title company is most involved on the seller side, but we certainly can give as much advice as we can when you have those type of situations. Harv, I think we're about ready to wrap this up. We are coming to you from Capital Mortgage Funding, powered by Fairway Independent Mortgage, NMLS 2289, and look forward to seeing everybody on Saturday or hearing everybody on Saturday. Feel free to give us a call on Saturday, guys. I bet you can't stump any of us. We've got so much expertise out there that I know that any questions coming in are going to be able to be fielded by one of us and answered correctly. And if we can't, we can't. You win the lollipop. I don't know. So Harv, I'll let you finish it off. Thanks for having us today.
Yeah, definitely. And just a few topics that we're going to be discussing on Saturday's show. Of course, Noel's going to be coming in, giving us great information. We're going to touch on, of course, the second home, that vacation home opportunity. We're talking about the summer tax bill coming up on July 1st and how to make sure your escrow accounts have enough money in there. And we're going to go over a little bit of the fine tuning of all the different components of home mortgages. So thanks for John Kolb. I'm Harvey Freed. We'll see you Saturday morning on the Hardcore Mortgage Real Estate Business Show on 97.1 The Ticket at 9 a.m. See you then.